I'm Brett Jennings with Silicon Valley Real Estate Journal, here with your fall market update and forecast. Now, if you've been waiting for prices to come down and the right time to buy, then I have a question for you. If you could purchase a home 10% off peak prices and get a monthly payment like we had back in January, then this is the market you've been waiting for. Why? Well, there's really three reasons why, and this is based on single-family home sales in Santa Clara County as of November 6th. Number one is prices have come down 10%. Now, why is 10% significant? Well, if we look at the last 40 years of Bay Area real estate, which this chart outlines, you can see a pattern. In the last 40 years, we've had four major corrections in prices, and our average correction is 10%. Now, when we look here, we can see that this is showing price per square foot in Santa Clara County, that prices peaked on March 18th at $964 a square foot. Today, prices have dropped and are actually stabilizing. We're starting to see buyers come back into the market at $871 a square foot. That's exactly 10% where our average correction is. Now, I know many of you are probably thinking, yes, but will prices go down further? Well, let's take a look at that. What drives our real estate market is supply and demand tempered by interest rates. Now, what we can see, if we take a look at what's happening with buyer activity, is buyers, as interest rates went up, buyers pulled out of the market. But now that prices have come down, we are seeing buyers really coming back in a strong way to the market. The table you see below is the real estate market in Santa Clara County broken into four quartiles: our high price tier, our above median tier, below median, and our entry level. Now, at our top price tier in Santa Clara County is around $4 million. We have about 270 homes in that tier that are on the market. Last week, 21 homes came up for sale in that price tier. Yet look at this, 51 homes sold. Again, 21 came to market and 51 sold. When we look at the next price tier down, our above median, and that's our $2 million price point, 45 homes came for sale in that price tier last week and 62 sold. In our below median price tier at $1.4 million, we had 36 homes come to market and 51 sold. And at our entry level, just under $1 million, we had 34 homes come to market and 49 sold. So what's the pattern that we see there is that there are far more buyers purchasing homes than there are homes coming to market. Again, supply and demand, more demand than supply. We're starting to see support for prices. And this 10%, this critical 10% level. Now, you might be wondering, how are all these buyers affording these crazy payments? Well, this leads us into number two. Why now is the market you've been waiting for? Because creative financing is back. What that means is it's creating affordability for buyers in ways that we haven't seen as these interest rates have been rising. Now, up until now, for the last several years, the primary loans you were seeing out there were a 30-year fixed or a 5-year or 7-year loan with a 30-year principal and interest payment. The new innovations in finance, things that we've seen many years back when rates were very high like the environment we're in, is something called an interest-only payment. Now, look at what this does. I started this conversation by asking you if you could get a monthly payment like you had in January. Now, in January, if we look at this table, you can see rates were at 2.91%. On $1 million loan, that monthly payment was $41.67 a month. Now, rates are much higher, but we do have some competitive options out there. There's a local regional bank offering a jumbo loan in our market for a rate of 5% or a 7-year interest-only loan. That same $1 million loan, paying interest only, not principal, but interest only, is at that exact same $41.67 a month. So yes, we can now get a payment, a monthly payment, somewhat like you would have seen back in January. So we have a higher rate, but because of the interest-only option, we can have the same monthly payment. Now, the third reason why this is the market you've been waiting for is that sellers are negotiating again. We're not in a buyer's market. We're not in a seller's market. We're in a very balanced market, but sellers are negotiating. Just this last week, we put some buyers into some homes, purchasing them slightly above asking, some right at asking, and a few that we were able to get under the asking price. Now, it leads to the question, when is the best time to buy or sell? Well, if you could purchase a home 10% off peak prices and get a payment like we had in January, then the time is now. Now, if you're a seller listening to this market update, you might be feeling like, wow, prices are down 10%. I missed the boat. That's not entirely true. I want to encourage you to think, if you're purchasing a home on the other side of selling the home that you're in, then you're buying in the same market you're selling in. You're taking 10% less on the sale of your home, but you're also buying a home that will be 10% less. And the benefit there is that your property taxes will be 10% lower for the entire time that you own your property. Now, if you have questions about any of this market information, you're thinking about buying or maybe moving up or moving down, please reach out to us. Get back to the person that shared this video with you. And until we talk again, this is Brett Jennings saying we'll be right here, ready to help you create a better life through real estate.